Hey business owners and financial managers, ever wonder if you're actually keeping an accurate, real-time pulse on your company's biggest tax headache? Payroll liabilities? Grimacing face. If the answer isn't an enthusiastic yes, then you're in the right place. We're diving deep into the one financial report that acts as your absolute lifeline for staying ahead of Uncle Sam and avoiding those nasty penalties. Your payroll transactions page for tax liabilities. Why this page is your financial lifeline. Think of your payroll transactions page as the detailed diary of every dollar you owe for employee paychecks before you actually pay it over to the government or a taxing authority. It's where every cent of federal, state, and local taxes, plus things like Social Security and Medicare withholdings, lives as a liability until it's paid. Without closely tracking this page, you're essentially flying blind. You might think you know how much you owe, but this report confirms it down to the penny. It's the source of truth for your current obligations, which is crucial because payroll tax deadlines are notoriously strict and unforgiving. What to look for? The key data points. When you pull up this report, focus on 3 critical pieces of information. 1. The liability accounts. Look for accounts specifically labeled as payroll tax payable, future payable, or state withholding payable. These accounts should reflect the cumulative amount deducted from your employees' wages and the corresponding employer-paid taxes that are due. If these balances look suspiciously low or haven't changed much since your last payment, that's a red flag. Triangular flag. 2. The payment history. Your software or system will typically show the date and amount of your last tax payment. You need to verify that this amount matches the previous balance in your liability accounts. This is the reconciliation step. If your payment doesn't fully clear the liability balance, you have an outstanding debt, and that clock is ticking. 3. The date range. Always ensure you are reviewing the correct date range. A common mistake is looking at only one payroll cycle when you should be looking at the entire period leading up to your tax payment due date, be it weekly, monthly, or quarterly. A full, accurate view is the only view that matters for tax compliance. The pro tip. Timing is everything stopwatch. Here's the secret to minimizing stress. Review this page immediately after every single payroll run. Why? Because that's when the system calculates the freshest liabilities. If you catch an error, like an incorrect tax rate or a missed deduction, at this stage, fixing it is quick and painless. Waiting until the day before your tax deposit is due turns a small fix into a huge, time-sensitive headache that could delay your payment and trigger a fine. Consistent, post-payroll review is your best defense against tax penalties. It ensures your books are clean and that you know exactly how much to transfer to the government when the time comes. With that said, thanks for watching and until next time.